Today, we will talk about job lots. The term job lot in finance refers to a commodities futures contract whose denomination is smaller than the typical standard lot for that commodity. For instance, the standard lot for a crude oil futures contract is 1,000 barrels per contract. Any crude oil futures contract corresponding to less than 1,000 barrels would therefore be considered a job lot. The term job lot is also used in the manufacturing sector to refer to custom jobs whose parameters fall outside of the normal production process. Commodity futures exchanges are a crucial part of the global financial markets. Through them, producers can access the commodities they need, and financial buyers can speculate on commodity prices and control risks through hedging activities. The use of standard contracts on commodity exchanges greatly simplifies the trading system and allows transactions to take place in large volumes and at high speeds. However, the standard contract sizes could be prohibitively large for smaller companies and investors. To accommodate these participants, commodities exchanges sometimes permit smaller order sizes, known as job lot futures contracts, which allow for smaller denominations compared to the standard contracts. Futures contracts are considered a job lot when the agreement for the delivery of a commodity has a quantity below the normal limits for a commodity futures contract. An example is precious metals, like gold and silver, which are often bought and sold as commodities futures contracts. If the exchange agreed to enter into a commodity futures contract with a buyer below the minimum denomination, it would be considered a job lot. Here are 3 key takeaways. 1. A job lot is a futures contract whose denomination is less than a standard lot. 2. It can also refer to a non-standard job undertaken by a manufacturer. 3. In the commodities futures market, job lots help smaller buyers participate in the market, increasing liquidity for all market participants. Hope this would help. Thanks for watching.